banks that you probably work with now. So again, we can get you your home bank if that's something that you're maybe more comfortable with, and we can also get you, maybe a mortgage through a different lender that will give you more of a customized option and really, fit what you're looking for better. So how do you get pre-approved? So the best way to get pre-approved with us, we will actually have a link that we will email to you at the end of this, which has a little calendar book, but it usually starts with the text. So things haven't changed that much for us in terms of pre-approvals. With COVID, we were already basically virtual, so we can do it over the phone, via text, over email. You can book a FaceTime, Skype, or Zoom call after this webinar. It can really happen completely virtually, so there's no, worry about buying a new mask to meet with myself or Joe. We can do it fully screen to screen. And all you'll need for that is going to be your pay stub and photo ID. And then once we proceed, through the next steps of the process, you can easily email or fax or scan any of the other documents that we're going to need to get you fully approved. So why would Canadians use brokers? So they really want to find mortgages that fit their scenario and fit their needs. So you can't really tell because it's on Zoom, but Joe's quite a tall guy. I'm pretty tall, but not quite as tall as Joe. But a really good analogy for why you would use a mortgage broker is when we're looking for shirts, you can get it that it fits on the shoulders, but then you're swimming in the shirt, or you find that, it fits well everywhere, but it's, you're supporting a crop top like the poor guy on the right. So we can really find you something that'll fit what you need, and you won't have to squeeze into something that maybe doesn't really fit, or you end up compromising. So we give you access to way more products than what just a single institution, say you went to your bank. We have way more products to offer you, a lot of different lenders that we can work with. And it really only takes one credit check, and that's valid across all of the banks and lenders that we use. So that, again, saves you getting hit multiple times for a hard credit check. We can just do it the one time, and that's valid across all of our lenders that we work with. And we also know that buyers all have a unique story. So what we're able to do when we're submitting a application for pre-approval is we can actually communicate things that will come up on your mortgage application. So we had a customer or a client come to us in early March before all the COVID, or might have been end of February. Anyways, in his credit report from a few years back, he had a little bit of liabilities, which made his score a little bit weaker at that time. So what we were able to find out is that at that time he was only a seasonal worker, and since then had secured full-time permanent status. So we were able to add that into the comments as we sent it in for pre-approval, and I believe it was the next day he actually got pre-approved. So we can really vouch for you and help communicate your profile to the lender for approval. And plus, yeah, sophisticated property investors, they all use brokers. We can save you money here and there. So again, why do Canadians use brokers? We actually have access to quite a different range of mortgages. So say you're looking to flip your home, you're looking for a portable mortgage, a new home build, improvement mortgages. When you communicate to us what you're looking for, we can find the perfect mortgage that's going to suit your needs and suit what kind of steps you plan to be making with your home purchase. And there's actually a study done as well that said that Canadian brokers often, on average, save their clients about $42 a month compared to an institutional lender. So that works out to almost a small Timmy's coffee every day of the month. They've raised the prices, so I believe it's only Monday to Friday. But hey, 5 coffees a week is still a good deal. So we like to say if we use us, we'll buy you a coffee every weekday of the month. So it's a win-win. So now that we've established the difference between, some of the mortgage options that are out there, difference between using a broker or using a bank, we're going to look at some of the mortgage mistakes that we see people come into the office with, and a lot of them they don't even know they've made. So mistake number 1 is going to be ignoring your credit score. It's always good to know what your credit score going into, the entire process is. You don't want to get stuck with a bad rate. So being able to review and, if need be, fix your credit score, that's going to be a really good kind of one-up on the entire process of having an idea of what that is. So it's really easy now to check what your credit score is, either through Equifax or Credit Karma. A lot of the mobile banking apps, I know CIBC and stuff, they all have a way to check your credit score. So it's a great first step into making into chatting with us to get your mortgage. So also, if you have gone through a bankruptcy or a consumer proposal, yeah, just be sure to follow the 222 rules. So the banks will not lend you a mortgage until you have at least 2 credit cards for a minimum of 2 years with a $2,000 balance. So if you are discharged and you haven't done this, it's going to be your first step. Again, if this scenario sounds familiar, feel free to reach out to us and we can chat about what options are available for you. An idea of sort of what what ranges typically we see to get approved for a mortgage. Anything above 630, you're gonna have no real issue getting approved. Anything in the 700s, you're in a strong position. Anything below that, still reach out to us and we can chat about ways to improve your credit score, way to yeah, really boost that and start building credit now so that you're prepared for your future purchase. And just a quick breakdown of what kind of goes into calculating a credit score. The biggest chunk that you're going to see here is that credit history is the biggest factor in creating your credit score. So if you do have any old credit accounts that you had in high school or in college, hold on to those, because the minute that you close that and open a new account, you actually lose all of the credit history attached to that account. So it's really good to keep the longevity of your accounts in order to be building that score and create a higher score. You can also see the second highest is going to be debt owed. So if you think about it in terms of a credit card balance, if you had $900 on a $1,000 credit card, it's going to hurt your score compared to having $900 on a $10,000 credit card, because they'll see that you've used up 90% of your credit, versus a much smaller amount. So if anytime they offer you a credit limit increase, it's always great if you can trust yourself to accept that, is to take that advance, because it's going to help your credit score and strengthen it by using less of your credit maximum. So mistake number 2 is not reviewing your options. So talked about this briefly previously on finding mortgages that fit. So there's going to be a lot of options of rates, lenders, ways to pay, and penalty calculations. So again, having an idea of all of these different options is great, so that you don't come in one track minded thinking that this one solution is the answer to everything. Have a rough idea of all the different rates and lenders, and chatting with us, we can walk you through all of those different things. So rate options. So here we have 2.84 versus 2.99. So the question is there a big difference? It doesn't look like that much, but actually over the life of your mortgage is a massive difference. So that can save you $1.43 per day, or a Timmy's coffee, $42 per month. And then over the life of your mortgage, it can actually save you over $9,500. So again, that's sort of the edge of using a mortgage broker, is we do typically save you money by getting you a lower rate, and a mortgage that is more fits what you're looking for. And as I was saying, in all those different logos we flashed earlier, there is lots of different banks that we work with, and running your specific scenario by each of them can result in some big savings, guys. So what we can do is take your scenario, run it by all of them, see what specials some of them are offering, any promotions, and really get you the best bang for your buck. As well as payment options, so monthly versus bi-weekly. So traditionally, people think, you pay for your mortgage monthly. That's what a lot of the institutional lenders will just offer. But realistically, paying bi-weekly will save you lots of money in interest. As you can see on the chart here, the blue chart is going to be for the monthly option, and the yellow one that's been kind of put in right beside is actually your bi-weekly option. So you see you actually pay off quite a bit less in interest, and it ends up saving you money. And different penalty calculations. So this is actually a really big one. So a lot of the lenders that you maybe haven't heard of, such as First National or any of those ones, they have significantly, for the most part, significantly lessened penalty calculations. We can see a lot of the big banks, if life happens, if you break your mortgage, you have to, sell your house, go back to renting, you have to move, anything that's going to, trigger you breaking your mortgage, you're going to get stuck with a $18,000 penalty fee with TD. They're crazy fees. So what we like to do is really find something that's going to be soft in the event that, worst case scenario, you do have to break your mortgage. You're not going to be paying out an arm and a leg just to cover that penalty fee. So borrowing too much is a massive thing that we really want you to keep in mind as well. You don't want to borrow too much and become house poor and, mattress on the floor. You can't order in pizza anymore. You can't, you have to cancel your Netflix subscription, whatever you guys are doing during your COVID lockdown. We don't want you to borrow too much that you can't afford to, buy nice things, still be able to live. So really borrowing within your means is really good mistake that we see a lot, as well as borrowing before you buy. So if you are planning on getting a car on loan that's going to have monthly payments, make sure to get your mortgage first before getting that, because we do see that even payments of $300 to $400 a month on a car can actually pretty heavily hurt what your maximum amount you can qualify for. And if you have already, you're already on loan, paying for your car, don't worry, don't panic. We can still work with you and get an idea, of maybe some ways to pay it off quicker or really boost what you can still qualify for, even with that car loan. Mistake number 4 is forgetting about closing costs. It seems to be a thing that a lot of people, don't really take into account. It's kind of that hidden number that jumps out at them as soon as they finalize on a home. So we actually do have a closing cost worksheet that we would give out in person. Since we're doing this all digitally, we'll have an email link that we will send to you at the end of this presentation with all of that info. And mistake number 5 is easy enough. Not getting pre-approved is going to be a big mistake. It only takes about 5 to 30 minutes. You really just need your pay stub and ID. It's completely free, and it can really help narrow down, what you can qualify for. It gives you a pretty good, in-depth look of what your scenario is, and it also provides a rate hold, like we were saying, for 90 to 120 days.
With us tonight.
So your next step after doing that would be to set up your home buying team. So again, the benefit of using a mortgage broker or a seller's agent for real estate is that we're going to have your best interest at heart, and we are going to be looking after exactly your needs. So it's good for all of these cases to set up your buying team and not to rely on any seller's agents or lawyers. So we're just going to look at a quick case study from Tavistock in Ontario. So the property was valued at $329,000. It was a $16,000 down payment, and they were paying biweekly $696. So just after 5 years, the market value of the home had increased to $419,000. They had $339,000 on mortgage left, so they could sell and take $140,000 of equity to their next home in 5 years. So these are just a brief kind of look at what kind of an investment real estate is. It's always going to be a good investment. The best time to buy it is always going to be now. And no other real, sort of investment or interest savings account is going to give you the same turnover that real estate can. So now we're going to get to the best part. It's our favorite part to talk about because it involves, getting you guys some money back. Yeah, there's the little label. It is the best part. So let's get into it. So the first one we're going to talk about is if you are a first-time home buyer, you are entitled to a refund of approximately $1,000 if you buy an energy-efficient home. So it also is available if you buy a home and increase its energy efficiency by about 5%, I believe. You could qualify for a refund. So for an example, if you bought a home worth $425,000, that could be a refund of up to $1,100 back in your pocket. In buying your home, you are going to have a Ontario land transfer tax. So what they've offered if you're a first-time home buyer is a land transfer tax rebate. So if you're buying in Ontario, the refund is of approximately $4,000. If you are buying in Toronto, don't know if anyone is planning on it, but if you are, they will kick in an additional $3,700. So if you were to buy, a home in Ontario, or sorry, in Toronto, the full rebate would be, $7,700 that would be available to you. So again, the example at 425 is 7,700. So new to Canada benefits. So this is actually a really cool initiative where if you are a new to Canada, permanent resident, and it's been within 5 years of you landing in Canada, they have reduced the employment requirements to just 3 months, and there's also no credit score required. So they only need, bank statements, insurance statements. They can use phone bills. So this is really good to get you into that step of getting into your home. It really, softens the qualifications to get fully approved. So if you are looking at building a home yourself or purchasing a new home from a builder, there is an HST rebate that's available to you. So for an example, if you were to have a $425,000 brand new home, the rebate would work out to be around $33,000. So that could also be an avenue that you can look at if you're interested in getting a new home to get that rebate. There's also a tax credit that is available if you are a first-time home buyer. So you fill this out on your income tax, and it's a credit of up to $5,000. So let's just look at an example. So this family had a household income of $85,000. So that worked out to be about $2,100 back in your pocket just from filling that out on your income tax. A lot of our, or not a lot, but I guess some of our lenders all offer a free 1-year home warranty if you are a first-time home buyer. So when we're going through, the pre-approval process, or we're on a pre-qualification call, just let us know if you're interested in this. And that warranty covers home heating, air conditioning, electrical, water heater, and plumbing. So, Murphy's Law, if something is going to go wrong, it'll obviously be in the first year of owning your new home. So just ask us about getting this warranty, and we'll get you through that application process. So it covers up to $10,000 in repairs, and there's no inspection required. So what they've also done is that if you are a first-time home buyer, you can withdraw from your RRSP completely tax-free. So they've increased it that each home buyer can withdraw up to $35,000 or $70,000 per couple, completely tax-free, which can save you an additional $21,000 just in the tax. So for this one, again, you just have to be a first-time home buyer, a person with a disability, buying a home for a person with a disability, or if you've just not owned any property in the last 4 full calendar years, you will qualify for this. So we're going to look at some ways to get a down payment, even if you don't already have one. So what we do offer in a lot of the municipalities, the ones listed here on the list, if you're interested in your area and you don't see it on the list, reach out to us and we can, confirm if it's there. But a lot of the municipalities are offering it's generally 5 to 10% in a forgivable loan. So what they will do is they will add an additional 5 to 10% to your down payment to increase the amount that you're paying right off the start, to lower your monthly payments. And if you live in the home for 20 years, then it is completely forgivable. You don't even owe them anything back. So especially if you're looking for your permanent home that you're going to be staying in for 20 plus years, it's a great grant to look into to get a bigger down payment and not have to pay that back. So other ways that we see of getting a down payment are accessing your line of credit, some rent-to-own programs. You can get gifted equity from the seller, money from family, and there is cashback mortgages available as well. So in total, just calculating all of the stuff that we just chatted about, you could, if you applied and qualified for all of them, save up to $52,000. So we don't expect you to remember all the facts and figures, everything I just talked about for the last 10 or so minutes. The point is that there's lots of savings that are available to everybody. And the benefit of working with us is that we know them. You don't have to know them. We can really help streamline the process, apply for the ones that are actually applicable to your scenario, and get you the most savings. So before we wrap up, I'm just going to cover what the first-time homebuyer incentive is. Get ready. It's the name of the webinar today. We'll get into it. So the incentive enables first-time homebuyers to reduce their monthly mortgage payments without increasing their down payment. So it's not interest-bearing and doesn't require any sort of ongoing payments. So the government will actually offer 5% if you're a first-time home buyer and it is a resale home, or 5 or 10% if it's a new construction in the form of a shared equity loan. So let's just look at a couple facts and figures for someone who's purchased without the incentive, and on the right, someone who's purchased with. So the home price is the exact same, the buyer's income is the exact same. The only difference is the column on the right has the additional 5% in using the first-time home buying incentive. So that lowers the insured mortgage to $378,000, their insurance premium to $11,000, and saves them in monthly payments $123, or in yearly costs $1,400. That's quite a lot of savings that can go into many other things, such as investments in your home, maybe a hot tub, any sort of just small just money back in your pocket that you're not ending up spending. So to look at properties that are eligible, any new construction or resale homes, any residential properties, duplex, triplex, fourplex. Basically, if your real estate agent can find that for you, then the first-time home buying incentive it's an eligible property. So who can apply? So any Canadian citizens, permanent residents, non-permanent residents who are legally authorized to work in Canada, all can apply. So the borrowers also must have a maximum household qualifying income of $120,000. And the loan amount is going to be maxed at 4 times whatever that current household income is. And of course, at least one of the borrowers must be a first-time home buyer. So that is the end of my presentation. And what we want to do as a thank you for signing up and coming to the webinar today is we want to send you a thank you card with a scratch ticket, which will give you a chance to win your down payment. The prizes are up to $10,000. So you might have seen a link in the chat from when you first got in. We'll send another one out into the chat now to sign up for that. It's really easy. Who doesn't want a chance to win their full down payment? That would make this process a lot easier for you and a lot easier for us. Yeah, so thank you guys for listening. I hope I didn't bore you or waterboard you with facts and figures. Just remember to get pre-approved, to call and reach out to us at either of the numbers on the screen there, or visit MortgageWeb/Barry Mortgage Broker to arrange a call back. Again, we're going to have a link in one of the emails that we send to book an appointment, and yeah, just reach out to us and start the conversation.
Awesome. Awesome. Thanks, Sam. That was really great information. I really appreciate that. I'm sure everyone here also appreciates that information. And yeah, don't forget to click that link and enter your information so we can get that scratch card mailed off to you. And if you have questions, do please leave your questions in the chat box below so we can get to them at the end of the presentation. So again, my name is Joe Blodek. Sam and I work together here, and we want to be able to give you all the information needed to get started. Can you guys see that screen there? Perfect. Awesome. Okay, so what we'll do is we'll just get started here. A little bit about me. We'll talk about that. I was a first-time buyer too. I really didn't know what I was doing when I bought my first home. I didn't know where to start. I didn't know who to talk to. I remember buying my first home. It was such a weird experience because I really didn't get any help from my mom and dad. They really didn't they couldn't give me any information as to what I needed to do. And I remember my dad saying something like, "Oh, I think it starts with like an agreement or something." And then I had to kind of figure it out on my own. So I'll talk about a little bit about myself, some examples, how to set up your home buying team successfully, some steps on how the whole process works in general, and then we'll move on to the Q&A session of this program. So here's my family, Melissa there, and my 2 kids. They keep me going outside of work. A little bit about my professional background. I've been in the financial industry for a number of years now. Went to McMaster University there, graduated from there, and I became a accredited mortgage professional in 2013, mortgage broker in 2014, and been top 10% of mortgage brokers in Canada since 2015. And why I became a broker? Simply, I love to get a deal on whatever I'm buying. So if I can get a deal on your mortgage, that's great satisfaction. I love doing that for people. It gives me so much satisfaction at my job to be able to do that for you. Planning, maybe you have a certain way you want to buy your home. You want to incorporate some closing costs into the purchase. Maybe you have a plan. You want to buy multiple properties over the time your home ownership career. There's a way to do that, and there's a lot of planning that can be involved. Also, choice. Working with the mortgage broker, you're able to work with all the different lenders that Sam said, and there's no fee to use any of these lenders. There's no fee to use a mortgage broker. So just a little bit about that. So for fun, I love to play the drums. Love playing music. And before I had a couple of kids there, I used to do a lot of charity gigs. So that's what I like to do in my downtime. So as I mentioned, I was a first-time home buyer too. I really didn't know where to start. I didn't know where to start with my first step. So our goal in this webinar is for all of you to leave this webinar just knowing what that next step is, whether you're just researching it now and getting right into it, or you've done a lot of research and this is just going to confirm everything you know. So just like Sam, I have a couple of examples here for you as well. Here's a newer home in Barrie, Ontario. Jack and Jill, they have a $75,000 combined income. And on top of their combined income, they also have $1,050 in monthly Canada Child Benefit coming in. Keep in mind that this monthly Canada Child Benefit is not something that all the banks use. Only certain banks will allow us to use this income. They have about $20,000 saved. And from that, they also have some debts. They have car loans adding up to approximately $400 per month. And they also have credit cards, and their minimum payment adds up to $100 a month. Can they qualify for a home? You might be thinking, that's too much debt. I have to pay off my debt before I can qualify for a home. Well, actually, with a $409,000 purchase price and a $16,250 down payment, they can qualify for this home, no problem. And their biweekly mortgage payment will be $787.70, which is fantastic. They'll be able to get into this house and probably pay less than what they're paying for rent right now. So that was an example in Barrie, and you don't have to be in Barrie for that example. You can be in Kitchener, you can be in Hamilton, you can be in Niagara Falls, you can be anywhere in the GTA. Next step would be, after you get pre-approved with Sam, is to set up your home buying team. You've met with a mortgage broker. Next thing to do is meet with a real estate buyer's agent. And that's really important. You want to meet with a real estate agent that is going to work with you, not with the seller and you, with you. Because if you work with the real estate agent that is selling the home, they actually have to legally put the seller's interests first before yours, even though they are allowed to work with both. So there's a lot of information that will not be transferred over from the seller to you, but there'll be a lot of information transferred from the buyer to the seller. So something to be really careful about. And then when you're working with a real estate agent, make sure you use a buyer's agent. And it doesn't actually cost any more to use your own real estate agent because the seller pays for the agent either way. All right, then you set up yourself with a home inspector. Home inspector will come in and do an inspection of your property during the period when after you've put in an offer and you have your conditional period for financing and home inspection. We get the financing ironed out and you get a home inspection during that time. Costs you about $300 to $400. Sometimes it costs $500 depending on the size of the home. But with that, you get your home inspected by a professional home inspector, and they can sort of point out any problems that they can see to you, and then you can work with that. It protects you as well. Then after everything is done with the financing and the home inspection, and you've gotten all that ironed out, you can work on your insurance. And you need to get this set up a week or two before closing. And you work with an insurance broker that works with many different insurance companies to get you the best insurance rate. And then you work with a real estate lawyer at the very last few days before your closing date to iron out all those details. And the real estate lawyer will have you bring in the remaining amount of your down payment. They will have you bring in their fee as well. And they'll have you sign all the paperwork that you signed with the real estate agent and the mortgage broker all over again, and finalize it all and fund your mortgage and register the ownership of your home, which is a pretty exciting day. And Sam and I make sure that your mortgage closes smoothly to make sure there's no hiccups and no surprises on the day of closing. So in a little bit more graphical form, here are the steps. So if you're not knowing where to start, the first place would be to save some money. Review your budget and start saving your down payment. If you don't have a down payment, contact us and we can set you up with one of those municipal grants. They provide between 5 to 10% down payment. Step 2 would be to speak to a mortgage professional like Sam. He's our first-time home buyer specialist, and he can help you guide you through what you're pre-qualified for. And if you're happy with what you're pre-qualified for, you can move forward to a pre-approval. Then you get pre-approved. Just said that. That's funny. Okay, and then you start house hunting with a real estate agent, a real estate buyer's agent. They can send you listings before they hit realtor.ca. Some real estate agents have exclusive listings that sometimes don't go on realtor.ca for a week or two at a time, so that you can actually get first glimpse of that listing before everyone else sees it. And a lot of the times you can get in before the crowd and get that home secured and locked in under contract. That's the fun part. And you want to make sure you're prepared with that pre-approval in place so you're ready to go. Even if you don't even use your pre-approval, just having it in place allows you to take advantage of any opportunity that does come up. And after the 4 months when your pre-approval expires, it's just a simple 5-minute phone call and a few different things that we need to do just to reactivate it. It's real easy, real quick. Make an offer. This is the nervous part. When you make an offer, you always make a conditional financing and home inspection just to protect you, just to make sure that everything will work out on your home inspection before you sign on the dotted line, and to make sure that the bank has an opportunity to review the home to make sure it fits within their guidelines. And at this point, once your offer is accepted, you will have to give the real estate agent a deposit. A deposit is anywhere between $1,000 to $5,000. And if you're buying right in the GTA, sometimes it's a lot more. But this deposit money actually is counted towards your down payment, so it doesn't disappear. If your down payment is going to be $20,000 and you give a $5,000 deposit, the remaining down payment you have to come up with is only $15,000. So that's pretty good. Then we get your final approval in place. When we do a final approval, that's when we're actually picking the lender we want to go with, the interest rate option we want to go with, and signing those final documents. Then the lender will say you are good to go and your file is complete, and there's nothing needed more from you, which is a really good place to be, because then it's smooth sailing right to closing. Home inspection, we talked about that. All right. And as mortgage professionals, we have to offer you life insurance as part of the mortgage package. All banks will do this as well. It is actually a completely optional product, but it's something you should consider thinking about now. Usually for a first-time home buyer, you're pretty young and the rates will be the cheapest in your life, because as you get older, those premiums do increase. So getting it set up when you're first getting your first home, you can get it set up sometimes for $20 or $30 a month. And if you pass away, your mortgage will be paid off, which is really good for, your kids or anybody else in your family. All right, and then when you get to your closing date, you get your keys from your lawyer's office and they complete everything for you. That's when you bring in your down payment and everything to make sure that you're all good to go, and the lawyer fee. Lawyers typically charge anywhere between $1,200 to $1,800 for their services plus disbursements. disbursements can be things like title insurance, things like courier fees. Some lawyers have courier fees. They need to send checks here and there. So make sure that you call a few different lawyers to get a couple different quotes. And if you want a couple recommendations, we can send you 3 or 4 recommendations in the area which you are purchasing to make sure that you have a local professional that you can meet with. Also, a lot of lawyers these days are offering virtual appointments, which is really cool because that gives you the opportunity to stay isolated and still proceed with buying your first home. All right. So those are the main steps with buying your home. As mentioned, if you have a question, please pop it down in the chat below, and Sam and I will get to that at the end of the presentation. So here's my second idea here for you all. Here's John and Jane. Here's a townhome. They also have a combined income of $75,000. They have $30,000 saved up, and their debts are $250 a month in car loans. Their debts also include $100 a month going to OSAP loans, and of their credit card balances, they have $50 a month going for minimum payments on their credit card. What can they afford? Well, they can afford this home for $325,000 with a down payment of $20,450. Actually, that is incorrect. I made a mistake there. The down payment should actually be, one second here, $16,250. I happened to get the 2 examples mixed up, so I apologize about that. But the payment is correct. So the payment would actually be $625.92. That is a fantastic way to build your equity because you're paying essentially the same or less than what you would be paying for an entire townhome in terms of rent. And as you're paying that mortgage down, you're building equity. Your property is rising in value and your mortgage is going down in balance. So that equity is the difference between the market value and your mortgage. And then whenever you sell, you can use that equity to move up to a bigger home down the line. And that's actually a way that a lot of people do move up to their bigger homes. They buy their first starter home, build equity really quickly because they got in real quick, real fast, and then they move up to their next home. You might be thinking, I want to wait and I want to buy my forever home right away. I don't want to buy a starter home. If you do that and you wait, I quite often see policies for banks change. So 2 years later, all of a sudden you don't qualify for the same mortgage you did 2 years prior. I see also prices change. So as you're waiting those 2 years, the prices go up so much that you still qualify for even less after 2 years for whatever reason, for less of a home is what I'm talking about. So by getting into the market right away, you start paying off that mortgage right away, and you start building that equity right away as well. So as Sam mentioned, to get pre-approved, it starts with a text message. You can give us a text and you can start the whole process that way. Sam and I are doing virtual appointments over Skype, FaceTime. We're doing them over text. We're doing them over Zoom calls, WhatsApp, whatever your preferred platform is, we can make sure we can accommodate. And our Facebook page is facebook.com/bemortgagefree. So what I'll do now is I'll open it up for the question period. We have some time now. There's a lot of questions that I imagine you all have. So if you have a question, just pop it in the chat below and we can answer those now. All right. So I got a question here coming in from our streaming service. And it says, can I get a mortgage if I've had a consumer proposal? Okay. So the answer is you can. There's a little bit of a time period you need to go through to rebuild your credit to the point where you have 2 credit cards, as Sam was mentioning, with a limit of $2,000. And then that way, the banks will see that you're able to responsibly manage multiple credit accounts, and they will be able to offer you a mortgage after that consumer proposal. So definitely reach out to us. We can meet with you virtually and discuss your situation in more detail to make sure that we answer those questions properly. All right, so thanks for that question. Do we have any other questions? Just wait here for a sec. All right, we have another question coming in. So, is there any way to get closing costs included in the mortgage? So, if you are a first-time home buyer, there are lenders out there that will actually provide you with cash back for your closing costs. So as long as you have a down payment available of 5%, then you can get a cash back of up to 3%. So almost your whole down payment back as a cash back. So on a $300,000 mortgage, you get $9,000, which is really good. And that will give you enough to pay for your closing costs, probably some moving costs, and probably pizza for the year, which is probably pretty good. There are also lenders offering cashback promotions in addition to the cashback available if you wanted for a mortgage. So good question there. Any other questions?
Just as a follow-up for that, Joe, some
Oh,
people
yeah,
might
sure.
be wondering, did they have to pay back what they get on those cashback mortgages, or how does that work?
Yeah, it's a great question. So if you get a cashback mortgage with a 5-year term, the cashback is repayable up until the 5-year term is finished. And then when the 5-year term is done, the cashback is yours to keep as part of the whole contract of your mortgage. Yeah, so that's a great question. And some lenders offer the promotional additional cashback. And if it's a promotion, then that one is non-repayable at any time. It's just a promotion for them to gain your business. It's a much smaller amount. Usually that amount is about $1,000 or $2,000 rather than $9,000. But it still is an incentive for you to go with that lender. Yeah, great question. All right, we'll just wait a minute here and see if there's any more questions that pop in. Okay. If you want to ask your question, you can unmute yourself and ask it over voice if you prefer, or you can just put it in the chat box below. Hello, hello. All right, we have another question coming in. The question is, how long do you need to be employed for before you can get approved for a mortgage? So that's a great question. And as a first-time home buyer, you might find yourself in any one of these situations. You might find yourself in a situation where you just graduated from, from college or university. And if that's the case, and you have a job in the field that you were studying, typically we need approximately 6 months worth of employment and that you be past probation to get that mortgage. Otherwise, the lender will typically ask for a cosigner. And the good thing is with adding a cosigner is that as a mortgage broker, our office is able to do it temporarily for say 1 or 2 years until we can take that cosigner off. And it's really easy to remove them in that 1 or 2 years. All right. If you are new to Canada and you've been in Canada and got your permanent residency within the last 5 years, there's also additional benefits to you. You will actually only need to be employed for 3 months and be past probation to be able to qualify for that mortgage. And if you're new to Canada, they have more lenient credit score requirements where you don't actually need a credit score. As Sam was mentioning, all you need is copies of cell phone bills and insurance bills to substantiate that you are a responsible person with your finances. Okay, great questions, everybody. All right, so don't forget, as Sam mentioned, to click on that link to fill in our scratch card giveaway, chance to win some money towards your down payment. We'll get those sent out to you. Otherwise, I think that's all the questions for now. And Sam, I guess we'll be sending out some links after this webinar.
Yeah, you'll get a follow-up email with some of the fact sheets we chatted about, as well as a appointment link, which will give you sort of a schedule to book a time that works for you to chat with us, probably on Zoom or through just a phone call. So
Okay.
look out for that.
Yeah, great. We have another question coming in here. And thanks very much, Sam. Can a person on an open work permit qualify for a first-time home buyer incentive? And yes, you can qualify for a home buyer incentive if you are just on a work permit. So that is possible. However, a lot of lenders, most lenders still require that you have permanent residency. So even though you can get the incentive, you might not get the mortgage, which is a little bit backwards, but do give us a shout and we can look into your specific situation and present it to the lender and see if we can make an exception. All right, we've got some more questions coming in.
Okay, so from Merlin here, during this time of COVID, what are the chances of getting approved? So COVID hasn't affected the approval rate too much. I mean, if you have been laid off, some of them are, still accepting pre-approvals. If you have, a letter from work stating the date that you are going to return to work, confirming that you will be, back to your regular employed status. But I don't think that there has been, any increase in non-approvals due to COVID. Other than that.
Yep, definitely. The thing that I'm noticing, and that Sam and I are noticing, the thing that's affecting it the most is if you've been laid off and your employer is saying you are returning to work, say on June the 15th, for example, and you want to get pre-approved now, the best we can do right now is offer you a pre-qualification and have everything ready for you on June 15th when you return back to your employer, because you actually have to be technically back working to officially get pre-approved, but we can do a pre-qualification beforehand. Mm-hmm. So that's affecting things. We've even gone to try to help our clients to see if we can get a letter of employment with that return date solidified. But even in those situations, the banks are still saying, because it's so uncertain out there, we must have the person back at work. So HST is actually not applicable to old or resale or used buildings. So in that case, there wouldn't be any rebate because there's no HST applicable. All existing homes that are built that are not new are not subject to HST. Great question. So yeah, those are actually really good questions coming in. I appreciate everyone's time today. Okay. So as Sam mentioned, we'll send out those links and we'll get that all sent off to you. You will receive a few emails from us, one with the copy of this program, copy of the chat questions, and a copy of the audio file. Sam, you'll be sending out the booklet, and then I'll be following up as well with some other emails with some more information about how to qualify with the first-time homebuyer incentive, and you'll be able to book an appointment directly from those emails as well. Okay. All right, everybody. Well, thanks for watching today. It's nice weather out there. Thanks for taking the time to meet with us, and we wish you well.
Yeah, thanks for coming, guys.
All right. Bye, everybody.